The trading strategy I'm about to show you net 26% profit in 6 trades in 6 weeks. And in this video, I'm going to tell you how to make your entries. I'm going to tell you how to make your exits. I'm going to show you how to maximize profit, and I'm going to show you how to minimize your risk. Let's get started. First things first, the tools that you're going to need for this strategy are the TC top and bottom finder, price versus well money flow, and trend exhaustion indicators. And you can find links to all 3 of these in the description below. Just click on the indicator link. More on that later, but I just want to jump straight into this strategy. First, let's talk about how you're going to enter the trades, the criteria you're going to look for when making trades. First, you're going to want to look at the price versus well money flow. This is the indicator I like to watch before making any entries. This is the first line of defense for me. What you're looking for is for the price versus well money flow to be low on its chart. And from there, you're going to check then if the trend exhaustion is low on its chart. If it is, all you look for after that is a buy signal. And when you get all 3 of these, that's when we're making our long trade entry. This is because low on the price versus well money flow means that the whales have oversold and they're likely to begin buying again. And when whales move money into the market, it begins to move the price up. From there, the trend exhaustion tracks how much momentum is left in a trend. And if it's at the bottom, it means the downtrend is just about exhausted and likely to start moving up soon. So if we get an oversold signal with the downtrend exhausted, this is almost a sure sign of a move up. From there, that buy signal will give you the closest timing to the absolute bottom. And again, the combination of these 3 signals is extremely potent. Once you find your point of entry, once you enter your long trade and are ready to go, what you're going to want to do is set your take profit at 4% here. When you get these 3 signals and you're ready to enter, here's what you need to do next. The risk management strategy that we like to use at Trade Confident uses a buy limit strategy. And let me explain what that is. When you go to enter a trade, what you're going to want to do is split your investment into 3 equal parts. The first part would be market ordered in immediately. This just means you're going to buy at whatever the price currently is, and put one part here at buy limit 1 at this price, and then at buy limit 2 on this price. The reason we do this is movement is never guaranteed. Even if we get crazy signals like this, price versus well money flow low, trend exhaustion low, buy signal, and moves up, we cannot guarantee that'll always happen. So if we get those 3 signals and something crazy happens, the price drops like crazy, the buy limits are here to buy the dip automatically for you. You don't even have to worry about it. And with that, if the price drops and you buy the dip, your break even actually goes lower. This means that rather than the price needing to come all the way back up to $1.51 here, the price only needs to rise about halfway between $1.16 and $1.51 here in order to be back in profit. This means as the price moves up, you'll go into profit faster and you'll actually make more profits overall if the price drops. So either way, whether the price moves up and you hit your take profit, you win, or if the market drops and you hit a buy limit, that just means you're going to make more money later on. So it's a win-win either way. The last part of the risk management strategy is setting a set take profit. This way, even if you're away from your trading station, you can make money, you can exit trades, and this is honestly just the safest way we've found to do it. Now, the TC top and bottom finder has a take profit percent built in, so you don't have to do the math. The default that we like to use is 4%, and that's the example I'm going to be using in this video. If you want to adjust it higher, just change this number. So example, if you want to take 10% profit, set it to 1.1 instead. Again, though, we prefer 4%, so we're going to keep it at 1.04. Once you make your market order right here, you use your 2 buy limits right here. From there, just set a sell limit order at that green line at this price right here, and that'll be an automatic 4% exit for you. The last thing you need to know before I show you how much profit the strategy actually makes is how to maximize the profit. Let's say you just use $1,000 at the market order right here. No buy limits or anything like that. Just for the sake of easy math, we're going to set $1,000 entries on the market order. Rather than set $1,000 for your entry right here, you take profit, exit, set another $1,000 right here, take profit, and just set $1,000 for every single entry. What you're going to want to do is actually, once you make profit from your first trade, reinvest that entire amount and then reinvest that brand new amount over here. And every time you take profit, you're just going to add it to the next entry. This is called compound investing. And as you go along, it's a snowball effect and the effects get bigger and bigger as you go along. So you have your entry strategy. You have your risk management. you have your exit strategy and you know how to maximize the profits. Let's see on Polygon Matic on the 4-hour time frame how much this would have net. Now, just a quick note, we do typically prefer the 4-hour time frame as we found this is the best balance between volatility and predictability when trading. Let's check out the first entry. It's going to be price versus while money flow low. As we said, trend exhaustion low, and we got a buy signal. And as we said, those three signals typically see crazy moves up in the market. Now, one thing to note before we really get into it is that signals on the TC top and bottom finder, whether they're buy signals, sell signals, strong sell, or anything like that, they post on candle close. So in this example, I'm going to make sure that the take profit right here starts on the candle close and then ends at 4%. So we have our first entry here, boom, up here. Easy 4% profit. Right here, price versus while money flow low, trend exhaustion low, right at candle close, boom, easy 4% profit. Price versus while money flow low, trend exhaustion low, buy signal, 4% profit. Price versus while money flow low, trend exhaustion low, buy signal, 4% profit. Now, there will be instances where you see the price versus while money flow high, trend exhaustion high, and still get a buy signal. And while this worked out, most often, if the price versus while money flow and trend exhaustion are high, it's more likely you're going to see trends down in the market. So even if you get a buy signal while these are high, while this one did work out for the better, I typically don't like to enter on these trades. So for now, because it doesn't fit into the criteria, we're not going to count this entry. Moving up here, price versus while money flow low, trend exhaustion low, buy signal, 4% profit. One last time, price versus while money flow low, trend exhaustion low, buy signal, 4% profit. As we can see right here, we have 1, 2, 3, 4, 5, and 6 trades. This started right at the beginning, literally the first day of 2023, and it went on for 6 weeks. So that's 6 trades in 6 weeks. Let me show you how that 26% profit came about. Remember the compound trading strategy that I talked to you about where you reinvest the profits every time? If you put $1,000 in the market order for your very first entry, you use your take profit here of 4%, your exit amount would be $1,040. So that's $40 profit right off the bat. Now you enter with $1,040, take 4% profit, and you can see it's slightly more now. You actually earned $1.60 extra. Okay, well, let's reinvest that right here, $1,081, 4% profit, and now it's $1,124.86. Do that over and over again, and after the exit, the 6th trade right here, you come out with $1,265. Overall, this comes out to $265.32 or 26.53% profit. However, if you just did $1,000 at each entry, each profit would have been only $40, as you see right here. This would have net you $240 profit at 20% profit margin. And you can see within 6 trades, it may not feel like a lot, but this 2.53% extra profit gets bigger and bigger and bigger every time you trade. The spread continues farther and farther. So this is how you're going to maximize your profits with the compound investment strategy. Now, the last thing you need to know in order to make this trading strategy even better is how to do this almost automatically. Now, on top of all of this, on top of the crazy profits you can make with this strategy, you need to know that using the TC top and bottom finder, price versus while money flow, and trend exhaustion indicators, you don't even have to be at the computer to do this. This is because of the alerts function. So what you're going to want to do is go to the top right corner of TradingView and click that little clock icon. What you're going to want to do is click on create alert right here. Boom. First, you're going to want to do the trend exhaustion and watch for pump. Click once per bar close and name it whatever you'd like. Boom. And what this is going to do is let you know as soon as the trend exhaustion falls into this bottom red section, as this is when we're most often seeing big pumps in the market. From there, you're going to set another alert using the TC top and bottom finder, looking for a buy signal, once per bar close, name it, and then click create. Now this will let you know as soon as we see a buy signal pop. The last signal you're going to want to do is again TC top and bottom finder, but this time you want strong buy signal. Once per bar close again, name it, and then click create. And from there, you are good to go. If you're using the TradingView app, just make sure to set notifications to go to your phone. Otherwise, this will just pop up straight on your computer. Once you get those signals and you can verify the price versus while money flow is low too, Go ahead and make your entry with your risk management, set your take profit, and you are good to go. Now, I know what you're thinking. Where in the world do you get these indicators to make this kind of profit? And before I tell you where, I gotta let you know you can get $400 off these indicators right now. And the way to do that very conveniently is in the links in the description. Just scroll down, click show more, and the indicator link is right here. Click that link. It'll bring you to the indicator page on the TradeConfident.io website. Now, the way to get this $400 off coupon is to actually purchase the bundle pack first. It'll include the trend exhaustion and my personal favorite, the price versus whale money flow indicator, as well as 7 other indicators for you to use. On top of that, it'll include the $400 off coupon for the TC top and bottom finder here. And with that, you get all 11 of Trade Confidence indicators, including the 3 indicators you need for this strategy, for less than just the price of this indicator alone, using that $400 off coupon. So what are you waiting for? Grab these indicators to start making the best entries possible. With that, thanks so much for watching. Trade safe, trade confident, and I'll see you in the next video.